Good morning and welcome to Bazaar Morning Call. I'm Anuj, with me Prashant and Sonia. We had a bad day yesterday for global markets. So let's see if today things turn out any different. One sort of data point which the bulls would take heart from is the fact that the dollar index is facing resistance. Not at just its 52-week highs, but at multi-year highs as well. Whether that can be a supporting factor. The US market was down, and especially the last hour was ugly once again after that intraday recovery. If you see the intraday chart of the Dow. Back home, of course, the Indian market was down, but perhaps was a bit resilient, but it closed below the 20-day exponential moving average. The texture has become a bit weak. The SGX Nifty indicating that we'll have a positive start, and then we'll take it from there. Guys, hi, good morning.
Hi, good morning, Anuj. Good morning, Prashant. And second day running, right? That the markets closed in the red on Wall Street, that is. So the Dow was down almost 200 points. Also, the crude market has come back into action. Crude moved up 4% yesterday. Brent is back above $104 a barrel now. There are prospects of that OPEC plus supply cut coming through. So that seems to be a bit of a bother on the sidelines. FI sold yesterday about 560 odd crores, while DIS bought about 150 crores. But the important bit is that the market is still well off their June lows. So if you look at the US markets, it's well above the lows that we saw in the month of June. The S&P 500 is 10% up from June. Nasdaq is up about 13%. So this is still an uptrending market, perhaps just, seeing a bit of a pause right now. For our own markets, a lot of stocks in focus yesterday. The IT stocks were under a lot of pressure, but the ones that outperformed were the auto stocks. The sales are due on Thursday, which is the 1st of September. And you had Maruti, M&M, Hero all outperforming the markets yesterday. So let's see whether there's any follow-through buying there. But Anuj, for the market itself, as I was saying, the US markets are still about 10-12% up from June lows. So is it that despite this choppiness that we're seeing, despite the volatility, one shouldn't worry too much about the long-term trend?
Yeah, Sonia, when the series started, there's a point I made that, when you have 5-week series, and September normally is a brutal month for option writers. So, you see this kind of a trend. The other point, I don't know if you remember, when in the last editors roundtable, we discussed the record bets on the US market, the short bets on the US market, and the big Q will come from US, like you pointed out. And over there, the number that was there was $107 billion. I mean, that's the huge amount of shorts which were sitting on S&P 500. And the question we asked was that did these hedge funds know more than we did? And obviously, we now have the answer, right? With the kind of decline that we've seen post-Jackson Hole. The big question is, do these shorts run or cover? Because, in that lies the answer to your question on whether, the market, revisits the June lows or, it does not. Because the classical indicator is that you run your short, you run your profits, but this is a huge amount of short position. So if the market turns, then the short covering can be equally big. So I think it makes for a fascinating month of September. For our market, I think it was resilient. The texture is turning weak though, but the market closed nowhere near the lows. I think that's something that the bulls would like. What it does is it makes yesterday's low sacrosanct, 17,166. And 17,250 in the past has been a very strong sort of support, and the market managed to close above that. So that zone of 17,150 to 17,250 now becomes important. In terms of the moving averages, the big one to watch is the 200-day simple moving average, which is at 16,975, roughly at 17,000. As long as it's above that, the texture is still positive. But then, let's see how things turn out. The other point is that clearly IT is showing signs of revisiting its lows. The Nifty may not do that. But if you look at this month, the IT index is down 5%. And that sort of has negated any move because of the bank Nifty, which is up about 2%. So if the IT index has to revisit 52-week lows, which is possible, we're just about 5 or 6% off that, I think then the market could have a bit of a problem. The other issue would be what happens to the broader market, because even in the decline, the broader market has remained very strong. In fact, this month, the mid-cap index is up 4%, while the Nifty is up only 0.9%. So let's see which way things turn, because I think in that you will get an answer in the market breadth. If it starts to weaken, then perhaps we also revisit the lows. But otherwise, maybe the market could dodge another bullet and move on. Prashant, hi, morning.
Good morning, Anuj. Morning, Sonia. No, absolutely. And I think I want to start with what you mentioned, the fact that yesterday the Nifty was down 200 points, but it was still about 160 odd points off the day's lowest point yesterday. So, and just think about it, right? Friday, we had that very large correction in US markets. Just try to reimagine the sentiment that was there circulating over the weekend, right? Absolutely bearish, extreme bearishness. And what did we see on Monday? I mean, sure, the market was down 200, as I said, but it was also up 160, 170 from the lows of the day. So there was no collapse. Broader markets did well, mid caps and small caps. Advanced decline was 1:2 in favor of declines. But when we began the day in the morning, it was some 8:1, 1:8. So, I mean, the fact is that the market, held on. It was down, but not out. And that's significant in the face of the very negative cues and just sentiment over the weekend. Last night, Wall Street has been, very, very orderly. It did sell off in the last 30 minutes, but compared to Friday's disorderly kind of, complete sell-off, last night was okay. It was nothing, half a percent, 1%, 1.25%, those kind of cuts as far as indices are concerned. Oil is perhaps coming back up a little bit, and I think this needs watching, because this is maybe after what happens broadly in terms of risk aversion or risk on, oil can set the mood for a very large importer like India. It's creeping back up at about $105. What will OPEC do? They've been making noises that they want to cut output. We heard comments earlier from the Saudi Arabia energy minister. Will they do it? Will it push prices even higher? Some believe that, and people in this show, energy market experts in this show earlier over the last 5 days have said oil perhaps heads back to $115, $116 a barrel. So be mindful of that. The other thing is Europe, right? Absolute complete mess. We're seeing power cuts. We're seeing gas prices. Gas prices, by the way, cooled off a little bit. They can't go, they're already $1,000 a megawatt. So, but point is, it's a mess out there. And in the midst of all of it, what is also happening is that expectations of what the ECB will do is creeped up significantly. From last Thursday, the European Union 2-year front-end rates have moved up almost 25 basis points. And now, in September, in terms of what markets are pricing in, it's almost equal from both the Fed and the ECB. Some 50 or 65% probability of a 75 basis point hike, both from the Fed and the ECB. Who would have thought? But that is where we are at. So there is tightening happening, which I think, and those expectations are getting entrenched once again. Sonia.
Absolutely. And, I take your point about what's happening in Europe. It's quite scary, right? Russia has drastically cut natural gas supplies to Europe. A lot of people are now calling it fuel poverty that most of Europe is facing, and perhaps Europe could head into recession as well. We spoke to a lot of companies that have exposure in Europe, and they said it's only gotten worse. So for our own markets, I think what the street is doing is looking inwards. So yesterday as well, you not only saw auto stocks see buying action, consumption names, right? Yeah. Whether it was the Asian Paints of the world, Nestle, a lot of these names were the stocks in the green. Britannia was the biggest nifty gainer. So, well, perhaps that could be the order of the next few days as well.
That reminds me of 2003 to 4 phase as well. Almost same thing was happening, Sonia. All the, in that phase, IT stocks were down 30 to 40%, and the banking stocks and auto names were up 40 to 60%. That did happen. So maybe early signs of that are visible here.
Okay, well, on that note, let's kickstart the show. We have lots to talk about in the next 2.5 hours. On the equity side, Rupal Agarwal of Bernstein says that they have been looking for cues to become more positive on India in the short term, given that the long-term case to be overweight India remains quite strong. However, in light of persistent global macro risks, which is a higher chance of a global recession with no Fed pivot anytime soon, they find it hard to become constructive on India tactically. While the intensity of earnings downgrades have increased, there is ample room for the trend to continue, and near record crowding risk makes the market more vulnerable.
Okay, let's get you some money market views then. Bhaskar Panda of HDFC Bank says that fighting inflation is the buzzword that all central bankers who met at Jackson Hole agreed to. Consequently, hikes of different sizes fitting to respective economies are in the offing. Meanwhile, dollar index just retreated from a 20-year high overnight. Emerging markets, especially Asian currencies, may remain under pressure due to all this and higher oil prices. USD INR traded above the 80 mark for most part of yesterday before closing below that on renewed supplies towards close of trading. Today, we could see a similar trend as USD INR pair trades around 80 pivot in intraday range between 79.90 to 80.10.
Okay, and on the bonds, Bhaskar Panda says rallied post hawkish comments from central bankers, but conditions are a little different. Do not foresee too much volatility as of now. He expects the 10-year benchmark bond yield to trade in a range between 7.25 to 7.30% for today. Now, we do have a lot of stock-specific action to track today, and we'll get to that in just a bit in our special Top 10 segment. We're looking at names like Reliance Industries, Kim's, BEML, BLS International, ONGC, Oil India, that will be reacting to positive news flow. There's Thyrocare Tech, Asian Paints, Berger Paints, Kansai Nerolac that are stocks that are likely to open in the red because of higher crude prices.
Well, let's get you some expert opinion from Mohammad Al-Arian on the Fed's aggressive policy stance and, of course, Fed Chairman Jerome Powell's hawkish signals at Jackson Hole last week. Listen.
So he finally sent the correct message. He should have done that months ago. He was unambiguous, he was clear, he stuck to his script, and he did it in 8 minutes. And the market is starting to realize that when your Fed chair mentioned inflation 45 times in 8 minutes, something is changing. That's the good news. The less good news is he didn't deal with the policy errors of the last 18 months. He should do that at some point. And he hasn't dealt with the fact that they have a monetary framework that's not fit for purpose. So if he sticks to his script, we should expect more hawkish talk as we go forward. I think what the market hasn't quite grasped are three things. One is the global economy is slowing at a much faster rate. And if you go beyond the US, it looks terrible. Mm-hmm. The US is the best among all the other major economies. So the first thing is to what extent the market has understood the slowing of the global economy. The second issue that I don't think the market has fully internalized is other central banks are going to become a lot more hawkish. Mm. The ECB narrative this weekend was notably hawkish. And the third thing the market has got to recognize is how do you deal in a world of dispersion? You know, we're coming from a world in which everybody was subject to the same common shock. Now we're seeing differences. And you have to navigate this. So I think there's more volatility ahead.
More volatility ahead, that is for sure. So that's an astute market watcher, Al-Arian, with his perspective. Rana Gupta is Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, great to have you with us here on the program. Thanks very much. Now this, what Jerome Powell did on Friday has been dissected, and I think, in a way, as Mohammad Al-Arian pointed out, markets are still coming to grasp with the fact that it was a significant 8-minute speech, and he kind of hammered in the point that inflation is a big problem, and I'll do everything in my control to bring it under control. But where does what does all of it mean for India, Rana? Because we can talk about global macros and markets, but at the end of the day, investors watching this program can invest here in India or choose not to, or sit out or wait. What is your sort of sense on where India is headed in amidst all of this?
Right. Although I think most of our viewers will be investing in Indian equities, but in this globalized world, we cannot ignore the U.S. interest rates. The markets, rallied from sometime around mid-June on the hope that Fed will make a pivot to dovishness. That was clearly not coming, or not came. That was clearly did not come through at the Jackson Hole. If anything, at Jackson Hole speech, what it came through is that rates could remain higher for longer till the time the Fed has got a decisive control on the inflation. Now, that would simply mean the global rates can remain higher for longer, which, coming to now Indian markets or Indian policy space, constrains the reserve banks, and also that it may force reserve banks to tighten should the currency weaken or any of the macro events happen. We do believe that the rates can remain a bit higher for longer, and as I think other experts also pointed out, this kind of outlook where the rates are getting higher, not just US Fed, but other central bankers becoming more hawkish, geopolitical scenario uncertain, and also there is this increasing risk of inflation and all of it. Around this time, to get into the stock market, you need supportive valuation, which was the case in June. In fact, if you recall our interaction, we would have stated that the PE derating that had happened in that time in the fall, that kind of factored in most of the rate moves. Now, last time when the US bond yields were above 3% for 10-year, market traded at 15.5 PE. Today we have, in this rally, kind of the PEs have again gone up to about 17.5 times. So I think the valuation of the overall market basis right now, given the outlook, is not quite supportive.
Okay. Rana, hi, good morning. So is the summer rally over, and do we go back to the June lows?
See, again, we would not be calling specific peaks or bottoms, but I would just say that the valuation in general does not look as supportive as it looked in June. And meanwhile, we also have to remember the earnings cut have happened, although a bit moderate, but earnings cut have happened. See, another thing that fueled this rally, and we have been highlighting this, that the earning cuts may not be as much as the market fear, because this kind of slowdown we are seeing all around the world, it is also coming with higher inflation, not less inflation. Now, higher inflation means nominal growth will be good. So coming to India, the top line growth will be good. So even with margins lower than expected, the absolute profit delivered is still good. So earning cuts will be lower. The problem is the P ratios in a tightening liquidity and tightening rates kind of world. Also, if oil goes up even higher, that's another risk, but that is not a base case. So I think one has to find good earnings growth where the company's top line are linked to domestic economy, company's top line benefits due to, let's say, inflation, and not much exposure to crude or crude-linked derivatives, and trade such companies trading at reasonable valuation. We can talk about those sectors, but I think broadly that's what we will look into. And if we just look beyond this short to medium term volatility, I think the longer term India positive argument that we have been talking about for a long time now, led by digital economy, manufacturing, and now increasingly we are seeing pace of infrastructure improvement and all of it, that stays. But I think to the valuation needs to be a bit more supportive for the story to become even more constructive than it is today.
Okay, so you're saying that you're long-term positive on India, but in the very near term, of course, there is pressure and the fundamentals are not supportive. So if one wants to top up, what are the sectors that you like? Because we're noticing a change in trend, right? The domestic-facing sectors in India are picking up quite a bit, whether it's paints, consumption, the FMCG guys like Britannia, the auto sector. What are the spaces that you like now?
Right. I think the first thing I would like to say that the fundamentals are still good. It's just that the valuation at this point in time is not as constructive as it was in June. So with that being said, I think also if you look at the Nifty sectoral indices, the domestic looking or the inward looking indexes like auto, FMCG, they have done much better than IT and pharma. Banking, YTD, I'm talking about YTD performance. Banking has not done as well, but we expect that to change. Also, it is in these sectors, domestic-facing sectors like auto, banks, capital goods, real estate. There we see the valuation comfort as well. The domestic-facing sector where the valuation comfort is relatively less is the consumer staples and consumer discretionary ex-auto sector. But barring that, I think the domestic-facing sector, auto, banks, then real estate and capital goods fits into the fundamental India story, and I would say the valuation is also still supportive.
Rana, so the view is a little cautious right now. Where is IT services in all of this? I mean, it gets hit as problems in US and the rest of the world grow, but it's already hit quite a bit. So at some point, it would have discounted a lot of bad news yet to come. Any thoughts?
Yes, I think for IT services, obviously with such a large portion from US and and global businesses, I think it's the top line outlook was very good until this far, but the top line outlook will get challenged. But we have to remember one thing: these IT companies are pretty resilient in their business model. So although the top line might get challenged, what can happen is that the margins can begin to hold up. So we have to look for a scalable player, diversified player with good margin defenses. Typically, the larger cap companies. Within the slightly smaller cap or rather medium cap companies, there are a few companies that are can be looked at on the bottom up basis. But I think one has to look at businesses which are diversified and have got good margin defense in terms of their attrition pyramid.
All right, Rana, we'll leave it there today. Thanks a lot for joining us. Well, on IT, yes, because the big issue is what happens with the valuations, because margin-wise, they're back to pre-COVID levels. And I mean, if that is the case, then if valuations also have to get back to pre-COVID levels, then the recent decline maybe doesn't matter. Look at that. This year, the Nifty IT is down 28%. That's the only large index which is still in a bear market territory. We'll do one thing. We'll take a break. We'll come back with our top stocks lined up after this break.
Welcome back. Our entire research team is now joining in to help us with the top 10 stocks for the day. So without wasting any time, let's start off. Anuj, what are you looking at today?
Well, Sonia, you trust the tape, which is telling you that the market's clearly bipolar now. It's punishing export-oriented sectors and it's doing well for the domestic stocks. So I think auto has clearly been the strongest pocket for the market. Maruti for one and Hero MotoCorp. My sense is that these are two stocks where every time you see this, the dip towards the 20 and 50-day moving average, these stocks see buying, and I think that's been the case. So both these names I'll again watch out for.
Okay, well, Reliance Industries, of course, was in focus yesterday post the AGM, and the company has clearly charted out a very clear growth path across verticals. They've also put a succession plan in place, which is a big green flag from a corporate standpoint. Brokerages are very upbeat on Reliance Industries, so let's just put that list on board. UBS, Jefferies, Goldman, Citi and CLSA all have target prices well above the current market price. And the big headlines, as we know, there is a big spend happening in Reliance Jio. Jio will be launching the largest 5G network by Diwali this year, and pan-India coverage is expected by 2023. There is an investment of 2 lakh crores for Jio's 5G rollout, and they will be also launching the FMCG business this year, which is very interesting from a retail perspective. The retail business has grown at quite a fast pace despite a challenging year. They will be investing 75,000 crores in the oil to chemical business over the next 5 years, and all of these will help the company double its value by 2027. A couple of other key features as well. The company announced the launch of Jio Mart into WhatsApp through the chat interface. They are working with Google to develop an affordable 5G smartphone. And the most important thing, according to me, is that the succession plan has now been formalized. Akash Ambani will be heading Jio, Isha Ambani will be heading retail, and Anant Ambani will be heading the new energy vertical where big funds are being pumped in. Standard disclaimer, of course, Reliance Industries is the owner of the channel that you're watching. Let's move on. Ekta has some more stocks that are in the news. Ekta, what are you looking at?
Thanks for that. Well, I'll start with Krishna Institute. That one is in focus because they've acquired 51% stake in Kingsway Hospital in Nagpur for around 80-odd crores. BEML and SCI are in focus because the government is looking to fast-track its divestment of BEML as well as SCI. The government is planning to sell around 26% stake in BEML and likely to invite EOIs over the next few months. Demerger of land as well as non-core assets are both expected to be completed by October. This is what reports are indicating. Thyrocare, Fundsmith Emerging Equities has sold shares worth around 36 odd crores, and BLS International, Nomura has acquired around 11 lakh shares via the open market at around 230 rupees per share.
All right, Ekta, thanks very much for that. Coming back to you for more, but oil sensitives should be in focus today. Oil prices are at 105. Sonal is here with more. Sonal, good morning.
Good morning, Prashant. Well, yes, a sharp surge in overnight session. Crude prices surged by 4% at that $105 per barrel mark. Couple of reasons. There is a potential OPEC plus output cut which could come through in their meeting. There is conflict in Libya, and Saudi Arabia last week did raise a possibility of production cut, which led to supply concerns and led to the sharp move that we are seeing in crude oil prices. OPEC plus, which comprises of OPEC, Russia and the allies will be meeting on 5th of September to discuss production levels. So Brent has settled at $105 per barrel, and production cuts right now, if they happen, could coincide with boost in supply from Iran if there is a settlement as far as the nuclear deal is concerned. So we'll have to watch out for what happens and what comes out of the 5th September meet.
Okay, thanks a lot, Sonal, for that. Here's a quick recap then of our top stocks with positive news flow. There's Reliance Industries, KIMS, BEML, BLS International, ONGC and Oil India, while stocks with negative news flow. There's Thyrocare, Asian Paints, Berger Paints, Kansai, Nerolac Paints as well. Let's slip into a quick break. On the other side of the break, Nishchal Maheshwari, the CEO of Institutional Equities at Centrum, will be joining in for some fundamental stock analysis. We'll also be connecting with B. Bhaskar Rao, the MD at Krishna Institute of Medical Sciences, to discuss the company's plans to acquire 51% stake in Kingsway Hospital in Nagpur. Stay tuned. Well, this week, the long-awaited demerger of Piramal Enterprises' pharma and financial services business is set to take place. The conglomerate, which currently houses both businesses together, is set to list the two entities separately. They traded as a combined entity for the last time yesterday, and the listed entity will now only contain the financial business, while the pharma business is expected to be listed in Q3 of FY23. Ekta is here with all the details. Ekta.
Well, yes, the demerger record date is set for the 1st of September 2022. Shareholders of Piramal Enterprises will receive 4 shares in Piramal Pharma for every 1 share held in Piramal Enterprises. The market cap of the pharma entity is expected to be anywhere between 24 to 25,000 crores eventually, which is a premium to the 18,000 crore valuation it had been given in 2020. While when Carlyle bought around 20% stake for around 3,700 crores, which was one of the largest PE deals taking place in the pharma space. Now, the pharma entity has 3 verticals: the contract development and manufacturing, or CDMO arm, which is majority of the business. It entails drug discovery, development and commercial manufacturing. The other 2 verticals are complex hospital generics, which basically contains inhalation, anesthesia and injectables, and the India consumer healthcare arm, which houses brands such as Saridon as well as Lactocalamine and the iPill. Now, CLSA expects a listing by mid-October. The brokerage is valuing the company at around 1,030, which would translate to around 206 rupees per share on listing, which is for the pharma business. They look forward to the listing as they expect eventually more disclosures, financial statements for greater insights on the pharmaceutical business on listing. For today, we can probably expect the financial business to list at anywhere between around 1,000 to around 1,300 rupees is what the indicative price is.
Okay, Ekta, thanks a lot for that. So that's Piramal we'll keep an eye on. Of course, the F&O contracts also yesterday expired and new contracts will be issued today. Nishil Maheshwari is joining us now. He is the Chief Executive Officer, Institutional Equities and Advisory at Centrum. Nishil, hi, good morning. Thanks a lot for joining us. I wanted to start with some big stocks. Let's talk about the IT services space first, because that is where concerns are emanating once again on whether the stocks need to correct more because of the margin concern and what's happening in the US, and the fact that the valuations, while they have corrected, might still be higher. But your thoughts on large cap IT, how to approach it now?
Morning, Anuj. I think this is a good time to start accumulating the IT stocks. I happened to spend a couple of weeks basically in the US, and I didn't see any sign of issue as far as demand is concerned. Whether you were at the hotel, restaurant or the airport, basically, I think there was huge crowds. Yes, people are not coming back to the offices, but that doesn't drive your demand for the IT. And so what I see here is basically last quarter at around 26-27% of attrition. I think the attrition is peaked out. I believe the margins have also peaked out, bottomed out, and the stocks obviously continues to remain cheap. So I think this is a good time to accumulate IT stocks, and especially the large caps.
Okay. Nishal, good morning. What did you make of the Reliance AGM yesterday? They've crystallized a plan as far as the Jio 5G rollout is concerned. The succession plan is in place. So sort of ticking all the right boxes. What would your view be on the stock now?
Morning, Sonia. Nothing incremental came out of it. I think this was all known except for the existing cash cow, which is the oil upstream and downstream business. Basically, at least from the presentation, it is not clear who is going to be driving it. So that's the only gap which I see. But otherwise, I think it was ticking all the boxes. We continue to remain positive on Reliance and continue to believe basically that's a good price to accumulate.
Nishal, by the way, any thoughts on this Piramal, the demerger? It's been long awaited now. It's finally happening. So you'll be able to basically buy the financial services entity standalone. And of course, the pharma business gets listed later in October. That's the expectation at least. Do you see any great interest here?
Morning, Prashant. I do not have it under coverage, but historically, we have always seen basically splits always creates value. And that's the only guiding principle I would take basically. And I think historically, Piramals have done great in pharma. So I don't see any reason that you would be losing any money here. So I think definitely if somebody's already have it, I think you should hold on to it and wait for the demerger and relisting of the pharma business.
Okay. Nishal, in the auto and auto ancillary space, so what would be your top bets now after the rally that we've seen?
So we continue to be positive on the CV space. I think Ashok Leyland and Tata Motors Those are our two top picks basically out there. I would actually put Tata Motors ahead of Ashok Leyland now, given that they have been able to be very strong on the green, on the EV vehicles, and almost, I think, if my numbers are not wrong, I think 70% of the market share, though it's a very small market today, but they already have that kind of a market share. And I think they have taken a lead ahead of everybody. So those two, and then behind that, basically Mahindra and Mahindra, and then then Maruti, and then the two-wheelers. So two-wheeler is now becoming a last preference for the moment.
Okay, and two-wheelers have not recovered as much as the other pockets, right? There's still a big gap in the mass market segment, which is struggling, which has been struggling for a while. I take that point. Just stay on. We'll come back, Nishchal, to you. We have management joining in. Our first management on the show today. Krishna Institute of Medical Sciences is in focus as the company has decided to acquire 51% stake in Nagpur's Kingsway Hospital for 80 crores. Now, Kingsway is a 300-bed multi-speciality hospital and will be used, and they will use the funds to repay debt. To discuss that, we're joined by B. Bhaskar Rao, the Managing Director at Krishna Institute of Medical Sciences. Mr. Rao, can you tell us a little bit about this acquisition? What are the occupancies of this hospital currently? Is it profit-making? And do you have plans to acquire the additional 49% stake, or will you just stick with this 51% stake for now?
So, good morning. And this is the opportunity we got in the central India, where we are informing to the investors that in the Maharashtra cluster we want to build one of the first hospital in Nagpur. It's a nearly 35 lakhs population, and this hospital has been built in 2019 by a SMS industrial person along with few doctors, has partnered with them, and they joined, and it has been opened in the peak period of the COVID, and they could able to turn around, and after that there is an opportunity for us to go and strengthen their existing facility by adding more clinical branches, more therapeutic branches. That's the reason that they have come to us, and we also looked into the opportunity. There is a lot of potential in this area, and the doctors are all more than 20-25 years experience in their own field. So there is a lot of potential to grow in the same branches, and as well as we can also add with our existing of new therapies. That's why we found this is the greatest opportunity for us. And also the culture and the habits and everything will be similar, where we have been acquired all these years within a doctor partnership. So that is one of the most important things, so that they can also grow along with us. That is one. Second thing is, whatever is the 51% to stake we need to put in, as we are always looking at the existing doctors has been spent about nearly 7-8 years by making this unit a successful one. So we want to continue them, and later on, if there is a need, we can also acquire, or we can also merge along with the KIMS main consolidated company. And also we can able to, these people will also part of the growth of Maharashtra cluster. That's why, because of their 30 years experience in their own field, that's why we selected this. And later on,
Mr. Rao, sorry, if you can give us more details of how are you planning to fund this acquisition?
The thing what we are seeing right now is about nearly 334 beds as of now, and it can go up to 500 beds with a minimal capex. But ultimately today it is costing us around 90 lakhs per bed, and when we ramp up to the 500 beds, it is coming down to 70 lakhs per bed. There is a 53% occupancy as of now and this year, and there is a lot of potential. This 53% is out of 250 beds are the functional beds. The other beds are also ready, but we have not been sourced the manpower. Whenever there is a need, we can able to source them, and we are adding more and more clinicians and more therapists.
Mr. Rao, 53% occupants, 53, right? 53.
Yeah, 53 in 250 beds, operating beds.
Yeah.
As of now.
Okay. Now, that is a very low number, right? You would agree, Mr. Rao? I mean, any particular reason for that?
This is only 3-year-old hospital, and
Right.
then the post-COVID and all, that's all. Usually any new venture that will take, this is a great thing they can able to achieve in 3 years' time.
Okay.
Because one and a half year has been gone with this pre-COVID, post-COVID recovery and all those
Got it.
things.
Mr. Rao, to go up to 500 beds, how much capex is required? You said minimal, but how much?
Maybe another 40 crores max for all these things to putting the new equipment, new technology and remodifications of few more beds to put in.
So you'll have to put in half of that.
Yes, nearly it will become another 40-50 crores.
Okay.
Okay. Any more acquisitions? Because, you know, you have been acquiring, I mean, this is your second acquisition that you've done in recent times. Any more acquisitions that you're looking at? If yes, what would be the growth via the inorganic route?
So actually what our thing is that we want to build the clusters. As you know that in Andhra and Telangana in the last 2 decades we are looking the similar fashion in Maharashtra and Karnataka and Tamil Nadu. So in these areas we have been a open eye on the inorganic growth and as well as the organic if there is a good potential that is available. So we will be keep adding more and more beds. We are looking out in the entire central India, that is especially in Maharashtra. We are looking for few opportunities, but we don't know when it is going to get materialized.
So you're looking to add more beds via the acquisition route. You think anything could crystallize in this calendar year itself?
Not as of now. We are only talking about, you know, that there's a lot of legal issues. We need to do the due diligence and all. We are not sure when it is going to come. Definitely, we are on the route in organic growth in central India.
Mr. Rao, you know, out of the, so now how many beds are you operating and are these all owned by you or some of them are just, I mean, you own the equipment, you own, and it's kind of the facility itself is owned by someone. So you're managing it basically.
Most of the units are our own,
Okay.
except one unit in Kondapur. There also we are planning to shift, as we mentioned before.
Okay.
So the reason is we always believe to have our own so that it will be in a long run, it will give good ROC and also the good return of investments for everyone. So that is our strategy from day one.
Okay. For FY23 and FY24, could you provide us with some sense overall post this acquisition? What will revenues look like? And broadly on the bottom line, what is the kind of growth we should expect on top of FY22, the number that we already have?
And see, basically, you see, one we have been acquired the last couple of quarters back, Sunshine, and then this is the Nagpur. What will happen in the beginning of any acquisition, we need to add more consultants. It is going to cost for the organization. By the time the new consultants who come onto the board to perform and show. So the bottom line, maybe little bit of a growth will be there. Definitely there is a growth in the existing, apart from these acquisitions, there is a single digit growth will be there in our KIMS consolidated one, about 3,000 beds. And these beds may not able to contribute in the next 1 or 2 quarters of this financial year. The next year will definitely contribute a reasonable good growth of double digits.
Okay, so you're saying initially your costs will go up. Actually, that is, I think, reflecting already in your earnings and perhaps that's why the stock is down as well. The margins have come under pressure. Your margins were about 30% earlier. They are now at 28%. Your EBITDA has fallen about 5%. So if your costs escalate because of these new acquisitions, how much pressure do you think it could put on the margins?
So basically, any acquisition that comes, it will be definitely low. And then once it has been there in 2 to 3 years' time, it will reach to our maturity level of what we have been performing in the KIMS in the last 2-3 years. We will definitely achieve that much of reasonable bottom line growth.
Mr. Rao, you know, I take that point. So not pinpointing FY23 or 24, but over the next couple of years, can earnings grow a double digit, early double digits?
Yeah, definitely.
Okay. All right.
And what are the occupancies now? Just one last question. What are the occupancy levels now at your hospitals compared to what it was, say, 6 months ago?
It is around 65%, and then there is a lot of headroom to grow further.
Okay, there's headroom to grow further. We'll leave it at that. Thanks a lot for joining in. That's the word coming in from Krishna Medical. The stock has actually been under a lot of pressure. It's well off its 52-week highs. And in the last 12 months, it's done nothing. I mean, it's down about 7%. Nishchal Maheshwari of Centrum Broking is still with us. Nishchal, you heard that conversation. Do you like such names? I mean, he did mention that acquisitions will lead to rising costs initially. How do you approach the stock?
So I think this sector is in for consolidation, and I see basically that's the way to go forward. So if you really look at it, basically across the country, there are only 3-4 chains of hospitals at the moment. And for a country of this size and so many people, I think you can actually have 10 more of these of the likes of the big chains like Fortis and all. So no issues at all. I'm saying basically somebody who's invested into this, he has to invest in for a long term. This is the way basically it is going to happen basically, because these are all heavy capex industries, and one has to be, but high margins also. You say he's got 20, 28, 30% kind of EBITDA. So we do not cover it, but I think this is one of the good hospital chains basically, and I think consolidation is the way to go forward in the industry.
Okay, consolidation is the way to go forward in the industry is the view over there. Let's talk about some more names. Nishchal, any thoughts on Zomato now? On because the jury is out on whether the worst is over purely in terms of stock price action at that 41.42, or could there be more downside? Your views?
So I would wait for, I think the management in the last call has already guided that they are now in the 3 or 4 quarters aiming towards profitability on a per unit basis. I think it's now time basically to wait and see how historically the management has delivered very, very smartly. So let's wait and see for the next couple of quarters what the management has guided. Are they headed towards that? I think in a quarter or two, you will come to know if the losses are going down and unit economics is improving. If that is so, basically, then 41 was the bottom of the stock.
I think we spoke last time also when you were on the show, defense, right? Look at something like Mazgaon Dock. We had them on the channel, I think, earlier part of last week, and they laid out pretty sort of not aggressive plans. I mean, is it that there's a lot of work coming in from the government on various fronts, not just kind of building ships, but submarines, etc. as well. Stock's just gone absolutely berserk. Any thoughts here? The stock or the space?
So, Prashant, I've looked at the defense space. The issue happens basically that the capex part of defense is very little basically of the overall. So we will see every year a large budget for the defense, but a majority of that, 70% that goes into the salaries and everything else. And then there is maintenance, and then there is upkeep of the existing hardware. So not more than 10% of historically is what my numbers I remember is the new capex that gets allocated every year. And then it gets spread over so many projects which are going over. So yes, you have a very large order book basically, but then whatever the government is going to allocate for that current year that's what you can achieve. So that is the question basically. We go back and look at historically Cochin Shipyard, Mazgaon Shipyard, they all got 10 years of order book and all that. BEL, HAL, everybody has 10 years of order book, but then money is not coming through. So it is not that suddenly that you have a large order book, you will be able to execute more. It totally depends what kind of allocation the government gives you basically for that year. So that is the question basically, and that is the, I believe, is the upside cap for these stocks.
Okay. Some of these laggards have come back this month, right? I mean, look at Zomato, for example. The stock is up over 26% in the month of August and is now back above that 60 rupee mark. Do you like names like this? Would you bottom fish here or would you stay away?
So I said basically just now that Zomato, I believe basically we have to wait a couple of quarters. He has guided. Similarly, I think Paytm is now guiding, saying that I think most of these people are now moving on understanding basically how the listed market plays, because now they all become listed stocks. So I think the management has to go back to their drawing boards and recalibrate and see basically how fast they can come back to profitability, because the listed space only understands profits and it is not a space basically where you take calls for 5 and 10 years, which maybe in the private equity space does. So I think once you are listed, you have to recalibrate yourself, and the faster these guys recalibrate, the better would be basically, and that's the way I think the market is going to like. So I think a couple of them have already started talking about profits. So one has to see how fast they can turn around and show unit profitability, and that's the way to go forward.
Okay, thanks. We'll come back to you in a bit. We have to take a quick commercial break on that note. On the other side of the break, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Stay tuned.
Welcome back. Well, the market actually on the SGX Nifty is looking quite good. So who knows, after yesterday's resilience, when the market clearly recovered after that morning slam dunk, things perhaps could turn better, or is this now a sell on rally market? Let's ask our experts, Sudarshan Sukhani and Mitesh Thakkar joining us. Gentlemen, good morning. Sudarshan, would you sell this gap up, or is this market still largely a buy and dip market? Your thoughts?
Yeah, good morning, Anuj. See, there is a strong support zone somewhere around 17,300. Now, yesterday the market held on to that support zone if we ignore the first 15-20 minutes, which is okay. Now, so far as that support holds, I think at least for the day, we'll go this, do this on a day-to-day basis. I can't predict that the markets will make new highs, but for the day today, the markets are a buying opportunity. So this gap up is a buy. It's a question of tactics, whether you want to buy immediately on a gap up, and the much better idea is to wait for minor intraday dips or minor intraday consolidations, not big ones, small ones, but be long today, and that applies to the Nifty and to the Bank Nifty and generally to stocks. And your stops are, as I told you, 17,300 is the support zone. Since it is never a real number, it's a zone, your stop should be initially 17,250.
Okay, 17,250 is a stop loss on the Nifty, and the strategy, I mean, you can adjust a similar stop loss for Bank Nifty as well. Mitesh, good morning. How are you approaching the index? Has the trend changed, or is it a market in which you would still look to buy the dip?
Well, I think buy the dip, I think remains good for me, because I think I'm taking a bet that the broader trend, which is the longer term trend, medium term trend, is still on the upside. We've had a rally from around 15,100 odd levels to about 18,000 odd levels, and I think this entire movement looks like correcting that kind of decline, rally. So I think overall, broadly, I think this is a market in which you would want to, now that we've had a good correction, want to figure out medium-term support areas, which for me is close to about 17,000 odd levels, give and take 100 points, and I think that range should hold out well. So broadly buy on decline, but from a trading point of view, you might still want to wait it out because we are slightly away from that levels, and therefore be more stock specific.
Okay, so since you've given us a cue to become more stock specific, tell us about the individual stocks that you're looking at. Sudarshan, let me start with you. Yesterday was interesting. You had IT under a lot of pressure. Consumption has been picking up in a big way. Autos did well. What are the stocks for the day?
Yeah, in fact, because of yesterday's price movements, there are a lot of stocks where short-term buying opportunities are coming. I'll start with Bazaar Paints. Bazaar Paints is a buying opportunity. It had a very deep correction. That's well behind it. It's a buy with a stop under 693. LIC Housing is another buying opportunity. It's been in a trading range. It's now breaking out of that range. You can consider buying that with a stop under 387. Voltas is my only intraday short idea. Voltas is an intraday short, and that's not necessary. Only if this market suddenly starts weakening, look at it with a stop above 990. And finally, Petronet LNG is a buying opportunity. It's not just for the day, it's also a positional buy. There is a very attractive double bottom that is getting confirmed with a stop under 215.
Okay, and Mitesh, what are you buying and selling?
Yeah. So I also have more of buy calls today. A couple of stocks, despite the fact that the market had a big candle on the negative side, managed to do well, and Colgate was amongst them. 1609 is the stop loss for me. That's a buy call for targets of 1675. BHL is another one. That's a buy with a stop at 57.5 for targets of 63. And Loris Labs is the third buy call with a stop at 567 for targets of 595. On the sell side is LT Infotech. On a mild bounce around 4,500, go short with a stop at 4,575 for targets of 4,350.
Okay. Well, Chandan Taparia is also with us. He's the derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good morning and welcome to the show. What are your thoughts on individual stocks and what's the strategy on the index for today?
Good morning, Sonia. So market on last trading session witnessed the profit booking open negative and then remain range bound. And we believe that again it got stuck in a range with support of around 17,150 hurdle at 17,442. So we believe some time consolidation could be there in both the indices. So it's better to focus on the stock specific. And yesterday, good part is that we closed negative by 250 points in the Nifty, but many stocks have given the fresh breakout and showing the sign of strength. So it's totally the market where you need to pick the right stocks to play the momentum even after the nervousness in the broader market. So talking about first trade, that is buy on HL. We have positive stance on most of the defense name, whether you talk about HL, BL in FNO and MTAR taking non-FNO. So first talking about HL as a trading ideas, this stock is holding well above 2200 marks from last 10 days. It is set for a fresh breakout, that is pole and flag pattern on the daily chart, which has the bullish implication. In the last series, it has seen the open interest addition of around 28% with 96% rollover. Clearly indicates that longs are rolling to the current series, so momentum could continue. So here we are recommending to buy for an upside target to us 2415 and recommending to buy with a stop loss of 2245 level. Second trading idea, that is buy on escorts. We have seen good momentum in most of the auto segment in last couple of days. Even series on series basis, Nifty Auto is continuously moving upwards from last 4 series and longs rollovers are intact here. So yesterday we have seen a fresh breakout in the counter name escorts, which hit the new lifetime high yesterday. It has seen even open interest addition of around 8% during the day. And in the last series, short covering was seen as open interest has fallen by around 33% with 88% wrong rollover to the current series. So entire setup indicates that further momentum of 4 to 6% cannot be ruled out in this counter, which is already there in the momentum. So recommending to buy on escorts with a stop loss of 1865. And here we have a target to us 2020 level. Last trading ideas, that is buy on India Cement. We have positive on the selective cement name, whether you talk about Ultratech, Ambuja, Grasim or India Cement. So here we have selected to go along with India Cement. The stock has completed a rounding formation on the daily and the weekly scale. Yesterday, it has seen the open interest of around 12% with price surge, which clearly indicates that fresh longs are witnessing even at higher zone. Even the open interest added by around 10 to 12% in the last series with 92% rollover clearly indicates that positive momentum and positive bias for current days. So recommending to buy on India Cement as a last trade with a stop loss of 212 and expecting it to move towards 230 levels.
Okay, thanks a lot for that. Have a great day. Let's slip into a quick break. On the other side, we have the pre-opening rates. We will also connect with PJ Nath, the MD and CEO at Nelco, to discuss the company's agreement with Intelsat Commercial Aviation to offer in-flight connectivity in India's airspace. Stay tuned.